Good morning to everyone. Welcome to the Twitter Spaces this morning. How you all doing? Hope you're all fine. Hope you all can hear me. What a great way to start the weekend, talking about investing and talking about real estate. So we're just gonna go straight to it. So thanks for all dropping in. Appreciate that. So let me start with a story just to set the stage of why we're doing this or what I want to talk about. So I used to work in an investment bank in Lagos, and my neighbor used to be this guy. He was like a millionaire, was pretty rich. You could tell he had some dough, right? And one day I got to talk to him. So I got to talk to him, and I always assumed the house he lived in was his. And he told me no, it's not his house. He's basically renting, and his rent back then was like 4 million per annum. So I was like, why don't you have your own house? I mean, you can afford to buy a house. And he told me exactly that if he had to build his own house, that would cost him, give or take, about say 300 million to build a house up to his own taste, right? So to him, instead of tying down 300 million, he was just going to rent and then deploy the 300 million to business to make more money. So that was profound for me in terms of real estate and in how people look at homes. Like we tend to look at homes like I want to own my home, but in effect, real estate is just a bulk, either cash or cash flow. You have to think of real estate in terms of cash or cash flow. And once you look at it that way, it does tend to color how you then approach investing in real estate. So just a way to introduce us to that topic. But the key thing to notice, we're not talking now about developing a property. So we're not going to talk about how to develop, how to build, that sort of thing. No, we're talking in terms of real estate like an investor. So we want to be like investors, right? So where can we put our money? How can we invest in real estate to play in that market? Is it worth our while? And how can we do it? What are the risks? What are the opportunities that exist for us? That's what we want to talk about today, right? And as usual, I tend to just give you guys the background, the financial, economic background, the topic, and then hopefully down the line we open up the mic and then folks can then chime in and ask questions and we can talk about it, right? So great. So just to get that in. So first of all, I always like to start by making the caveat, all what we're doing today is all educational. It's not investment advice. You're not being invited to invest, and don't think as advice. Do your due diligence and always talk to your advisor before you advise, right? Next thing I always like to say to make the point that whatever you are doing, you first of all have to build your emergency fund first before you start to invest. So before you even invest in anything, the very first thing you should do is try to build an emergency fund. That way, should anything happen to you, because stuff will always happen, you always have cash flow to fall back on, and you don't have to go sell down your assets or your portfolio to meet an unforeseen need. So start with your emergency fund before you do any sort of investing, right? Okay, so with all those caveats and disclaimers in place, we can start to go into real estate investing in general. So let's just understand the difference between savings and investing, right? So once you earn money, so you've earned money and you don't spend it, you are saving, right? So once you don't spend earned income, and earned income could be dividends, it could be your salary. Once you make money and you don't spend it, you are saving money. There's no planning to it, you just haven't spent. So that's it, you're saving. But once you deploy those savings to a planned outlet to get a preconceived return. So like you take your savings and say, I want to put it here because I want to make X amount of return. That's now investing. So investing is more or less you are planning and you are expecting an outcome, even though there's risk involved, but you are planning and you are expecting an income. So you cannot invest without you saving. Savings is the first step before you then go into investing. So like I said in the very first topic when I talk about my friend, the millionaire, we want to think of real estate in terms of cash flow, not the house, but in terms of cash flow, right? So when we are investing in real estate, what we are actually doing is we're investing in the title of a security. Forget about the house. You are investing the title of a security. And that title could either give you income or it can reduce costs for you. So it's either when you invest in real estate, you are either getting income or it's reducing a cost for you. That's really why you're investing, nothing more, right? So that being said, we were going to talk about Nigerian investing and we're going to talk about offshore investing. And you're going to see why I'm separating both of them as we go along. The main reason is this. Nigeria has very, very limited options in if you want to invest in real estate by investing in that title to get cash flow. The options are a bit more limited. When we talk about offshore, you will see a lot more options. So I'm going to try to break it down, do Nigeria first, and then do offshore second. So like I said, the key thing about in real estate is you are investing in cash flow. And that cash flow either gives you income or that cash flow reduces cost for you, right? So let's talk about Nigeria. If we were going to invest and we're Nigerians, what are the options open for us to invest in that title, in quote, to get that income or to reduce cost for us? How can we do it? I looked at all the securities. I did not see a lot. So let me give you what I saw if you want to invest in Nigeria. Number one, Nigerians buy land. So they tend to buy land, undeveloped land. They get the paperwork, maybe deed of assignment. You go get your certificate of occupancy, and they trade that land. There's more like arbitrage. When you buy the land without regulation, then the value goes up as you get paperwork to make it more legal. So there's a bit of arbitrage there, but it's very illiquid. If you're doing that buying of land to sell and all that, it's a very, very illiquid transaction at first. And without title, you're literally taking a big, big risk. So you have to quickly buy, then quickly go and regularize your title. So that's one thing Nigerians do in terms of investing in real estate. They try to buy land, right? And when they're buying land, they're trying to do an arbitrage, between inflation, right? And then the retail price of what you're paying for. So what I mean is this. Nigerians are buying land because the Naira is losing purchasing power. So they try to invest in land because land holds its value in terms of purchasing power, right? And the whole idea is that if you hold that land, the land value rises faster than inflation can eat your Naira currency. So that's why they buy land and real estate in general. So you can buy land. There's also people buying carcass of a building. So they buy a building and do a fixer-upper, not like the American fixer-upper, but we buy carcass. We try to fix it up and try to sell it. Like you buy it off plan and it's cheaper, and then you can try to fix it up and try to sell. So that's the universe. There's also rentals in Nigeria. So we buy land, we buy a house, for instance, and then we rent it out, and then we get income on that, right? And again, the key thing here people are trying to do here is to do the arbitration between inflation and rental price, right? Because if you borrow to build a house, then you possibly have taken a fixed term loan. So your term loan could be, say, 20%, but you're always going to rent out that house at the going rate. So there's always going to be a difference between what you are paying to the bank and what your renters are paying to you, right? And that's where the profit is, that differentiation between the interest that you are paying to the bank or to your lenders or to your borrowers and what the tenancy are paying to you. So there's also rental income in Nigeria per se, right? And I did know a guy in Abuja that was basically he would buy or he would rent a 5-bedroom house. No, he would rent a 4-bedroom house, and then he would convert that house to a 5-bedroom self-contained condominium. So he would buy a 4-bedroom duplex, and then he would convert that 4-bedroom duplex to a 5-bedroom condominium. So in effect, he was increasing the cash flow of that title. The title he bought was a 4-bedroom duplex, then he converted to a 5-bedroom condominium, which means it was all self-contained. And by doing that, he was increasing the cash flow on that transaction. The extra room he got was able to pay the interest and also make a profit for him. But the key thing he was doing that he was buying these properties or renting these properties in highbrow areas of the city. So he would go to Asokoro and then buy a 4-bedroom or rent a 4-bedroom for, say, 5 years. Then he converted to a condominium to either 5 or 6 rooms. And he's able to rent out those individual self-contained rooms at a rental price that he's able to pay the rental back to the owner and to make a profit for him. So a very, very smart way he was playing real estate. And again, like we said, when we're talking real estate, we're talking about the cash flow. So in this case, he was doing cash flow to get income to himself, right? So that's his way of playing that Nigerian real estate market. What of when you buy your own home in Nigeria? Are you also playing the real estate market? Yes, you are. That's when we talk about reducing the cost, right? Because if you are renting in Lagos, remember what we're talking about. If you're renting in Nigeria, what it means is that your rent tends to go up and up and up and up. So a good way to cap your rent is if you, for instance, borrowed a fixed cost, fixed term loan, right? And then you invested in real estate, you have locked in your rent in quote because you're no longer paying rent that is appreciating annually. You've locked that rent in. Then you are now paying a mortgage instead of paying a rent. The differentiation is not really going to be until the return. If you do the calculation and you say, okay, I borrow 100 million naira and I'm going to pay the bank at 20%, or I'm renting a house for 20 million and the house price might go up by 5 or 10% annually. If you do the maths, there's not much difference there. The difference is this: you've locked in your price increase. The bank, if you have a term loan, the bank cannot come back and say, hey, rates have gone up. We want to take your rates up, right? So you've locked in that cost and then you're able to ride out that inflation. So real estate or owning your home does give you a way to play that inflation, handle, to play inflation and also to lock in your cost. So in that instance, it's more like you are reducing your cost when you are playing in that market by you owning your own home. So remember what we said, real estate is either you want to get income or you want to reduce cost. So for Nigeria, this is basically what I have seen, buying the land, buying the carcass, doing your rentals or owning your own homes. What about securities in Nigeria? What about if we were talking now, we are investors, right? And we want to invest in real estate. We don't want to own the home, or we don't have 100 million to go buy a home. Are there options for you to get into the market, real estate market in Nigeria? Yes, there are. So we have what we call, and I'm going to just type it in so you can always follow, is the REIT, REIT. REITs, those are called Real Estate Investment Trust, REITs. And what it is very, very simple. It's just a mutual fund or like a unit trust that invests in real estate, right? So you give your money to a manager, the manager buys homes, and then when those homes pay rentals, the manager collects the rentals and gives it back to you. That's just a simple way of describing what a REIT is. Nigeria has got REITs. I think we have about 4 REITs. We also have mutual funds that also invest in property. For instance, you have the UPDC. Yeah, UPDC used to be owned by UAC. They own most of the GREs is still over Nigeria, was at once owned by UAC, and UPDC was carved out of UAC. So Stanbic manages the UPDC mutual fund. So you have Chapel Hill, that's all they manage the Nigerian real estate investment trust. You have Stanbic IBTC, and you also have SFS that was managed the former Union Trust. So you have mutual funds, and you also have infrastructure funds and bonds in Nigeria that invest in the market, i.e., securities. But the problem is this: when I looked at those investments, I didn't really see a lot of return, guys, to be honest with you. They were all posting less than 1% return. So I was like, this might not be worth your while. So whilst they are good, and you might want to look at them and see if it's something that's going to be worth your while, you might want to look at the REITs. So look at the REITs or look at mutual funds in the Nigerian stock market. They are there, but the yield was very, very uninspiring for me. I would prefer to just buy a straight federal government bond, and just get my coupon than investing in those the REITs because the yield really was too low on the mutual funds that I saw for real estate. So that's one thing why I'm not too bullish on them, right? Why take low return with the high risk? Might as well just invest in the federal government bond. So all what I've talked about now has to do with Nigerian investing in real estate. I've talked about doing it for income and doing it to reduce cost. And I've talked about buying the land. I've talked about buying the carcass. I've talked about doing rentals. I give you the example of my friend that is buying property in a highbrow area in Abuja, then he's then converting those highbrow properties from a duplex to a condo. So he's increasing the cash flow that he's getting from that same floor plan. And that cash flow is basically his profitability, right? Then I talked about the investment securities, the mutual funds and all that. And I said, even though they exist, I've given you examples of the UPDC, the Chapel and all that. Even though they exist, the returns to me were not that good. So I would just prefer to just buy the federal government bond of the same tenure and get my coupon, more or less. Okay, so all that we've talked about really is for Nigeria. But let's now maybe talk about opportunities that exist offshore. So if you're trying to invest and you're Nigerian and you want to play in the market, right, outside Nigeria, how could you also do it? It's going to be the exact same thing, right? It's going to be you can buy investment securities that give you cash flow and also save costs for you. The difference with being offshore is that there are lots of options for you to play in that market. Lots and lots and lots of options for you to play. And that's where the differentiation then comes in. Because when we then talk about offshore, we can do the REITs, we can also do ETFs of offshore, and we can also do what we call this crowdfunding. So there are lots of investments now that you can invest in a quote unquote, crowdfunding platform that allows you to invest in the US real estate market. So I'm going to put up a chart right here on my Twitter feed. So if you go back to the Twitter feed, you're going to see this chart I'm going to put up. And it's a very, very nice chart. It's talking about major asset class returns for the last 5 years. So this guy is basically calculated. I just put it up, guys. So if you go to my Twitter feed, FinPlan Kalaja 1, you'll see there. So they basically calculated, they took all the major asset classes, bonds, equities, commodities, they took all that and they looked at 5 years till November 2021, right? And they said, which of these investments have done pretty well for the last 5 years? That's what we're looking at. The number one investment class, this is for ETFs though, just for ETFs. The number one investment that has returned the most in terms of annualized return for ETFs is the US stock market. So the US stock market, so that they track the VTI. So if you want to buy the US stock market via an ETF means an exchange traded fund. All it is just like a mutual fund. The difference being you can buy ETFs during the day. You don't have to wait till the end of the day. So it's called exchange traded. You can buy it during the day, right? So they tracked and they said the number one asset class that has returned the most by way of annualized return is going to be the US stock market, i.e. VTI. The next is going to be US REITs. So they are measuring that by tracking the VNQ. So the VNQ is basically a REIT that is buying US properties. So if you want to invest in, say, US market right now, because you're in Nigeria, you can't go to the US, you can't collect rent, you can't fix up a house in the US. So what you want to do is you want to buy into a platform that gives you access to the US market, gives you access to those homes in the US market. So I think I also looked at Chaka, and I checked if they had the VNQ. I think it's there. So you can actually just on your phone, literally just buy the VNQ and you have access to the US market. And that is returning about 11%. That's US dollars, 11% annualized in the last 5 years. So this is in US dollars. So it's clearly beating US inflation, which now is high at 6%, but it's clearly beating US inflation. But most importantly for you in Nigeria, you are getting an 11% US dollar return, right? If you did this US REITs, right? And also foreign REITs is going to be the same. There's going to be the VNQ, but with the I at the end, so international, right? So the VNQ is going to be US, but the VNQI is going to be real estate across the world. So you're talking about real estate in Japan, in Australia, in Europe as well. That would also give you a return, give or take about 6.2%, 5 years annualized. So when you were then talking about investing in real estate outside Nigeria, the options start to open up for you because you can then do ETFs and you can also do REITs, right? You can also do mutual funds as well because you are investing in a larger market that has more options. And like I said, it is possible because I pulled up Chaka and I was able to see this VNQ there. So that was a great promise. Yeah. So that's an opportunity for you guys to get into and try to diversify your real estate portfolio by buying into that. Also, I did see this I call them crowdfunding platforms where it is possible for you, right, to buy into unlisted property. So you have, say, a company that says we're going to build either logistics or we're going to build apartments, and you give us the money we build, and then we give you back the dividends, just like a REIT, right? But a bit more private, right? So the risk might go up a bit because it's not quoted in any market. You might have liquidity issues, but the return does seem to be higher. So in these instances, you have to go and invest in the product or in the platform that those guys have created, right? A good one is going to be Fundrise. Fundrise. So I'm going to just type it in there. If you just Google Fundrise, I'm going to type them on the Twitter handle, right? You can just Google it and you tend to basically buy into them, right? And when you buy into that portfolio, then you can buy either into their whole portfolio or you can buy into specific project that you see. So if you go online, you see, hey, get into us, buy this, or give us the money that we invest for you. But the whole idea is that it's the same thing as a REIT. You're buying into an apartment in Texas, or you're buying into a logistics platform in, say, Ohio, more or less. And that gives you also that diversification. You see the risks that are listed there. You see your potential return. I was seeing anywhere from 11 to 15. I saw some at 19. So that's a good way for you to also invest. You won't find this in Chaka or those apps because they're not quoted securities. You have to buy into their portfolio, right? So the challenge for you, if you're coming from Nigeria, is how you can get in or get your funds into that opportunity, because you're not going to find it per se on those apps that you use. Also, I saw a good one was also CrowdStreet. So CrowdStreet was also good, and I'm going to type it in as well. CrowdStreet was also not like that. That was also good if you're also trying to get into the market abroad to then buy into those opportunities. So Fundrise, CrowdStreet, I did like them a lot. And you're able to buy these. They're almost the same thing. It's just going to be the minimum. I think Fundrise is going to be like about $1,000 to get in. CrowdStreet, I think it's also 1,000 all the way to 10,000. You can buy your package or whatever that suits you. But remember what I said, these are private transactions. Even though they're a company and they do a lot in terms of investing, they are private. Those are not quoted on any exchange. So your risk is higher. That's why you might probably get a better return in terms of liquid or in terms of yield, but you're also taking on a higher risk than if you did a VNQ, which is going to be quoted on the market and is run by Vanguard. That V just means Vanguard. And Vanguard is one of the largest fund managers in the US. So the difference really for Nigeria and for the US is the quality and the variety of options that are available for you to play in the property market, right? So let me just try to close out and say this, right? Look at real estate again, like I said, as cash flow. Forget about the house per se, it's cash flow. And when we talk about cash flow, it's either going to be the cash flow you are saving cash flow to yourself, so you're not spending money on rent, or you are investing in real estate to get cash flow in terms of rentals, or in this case, in terms of a dividend or a rental income from your real estate, correct? Okay, so if you take a mortgage, what you are doing is that you are locking yourself in to that interest rate and ignoring inflation or higher interest rates going forward. Let's take the example of the US. Right now in the US, rates are very, very low. So if you went to a bank to try to buy a house, you would pay anywhere from 2% to about 6%. Very, very low. We're talking about these are rates for 30 years. So you pay 2 to 6% for 30 years, correct? So now, what if you got that loan for say 3% and you bought a house or you bought an apartment complex? You would rent that apartment complex at the current rate, at the inflation adjusted rate, but your cost, which is the bank loan, is locked at 3%. So you can see what you're making, you're doing already. You're making an arbitrage on the yield curve, right? You are locking in your cost, but you are opening up your profitability because you can charge rents at whatever the market price goes to, but you've locked in your cost. This is what we're talking about, you playing the cash flow game. It's not the real estate game. You are playing location, 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 but you are playing it for cash flow, right? Which is the point we're trying to make. So you were then saying, hey, you want to get that cash flow by locking in your fixed income rate and then allowing your dividends or your rentals to then go up, and then you can charge. In Nigeria, it's a bit more complex because I don't know, you may have one or two organizations that would give you a mortgage, right? But at what cost? The property market, you make your profit when you buy. That's when you make the profit. You make your profit when you buy. And my problem is that if you are getting a loan in Nigeria for 15 to 20% to buy a property, then you've already locked in a very, very high interest cost that even when you rent out, how can people pay you back to enable you pay back that loan and all that? So that's why you see most property in Nigeria are offered for sale, because people borrow, buy, build them, and they have to sell to pay back the bank almost immediately. Because if they try to do a rental, the cash flow is really not going to be sufficient to allow them to pay back the bank and make that margin. But in the US, it's a bit different because rates are lower. And since rates are lower, you can then take advantage of those rates and then try to make a margin and all that. Yeah. So again, I try to type in what I've said. I've posted the chart that shows you the 5 years annualized on my Twitter feed. I also put in the Fundrise and the crowd street funding, and there are lots of them. You don't have to do this too. You just have to look for real estate crowdfunding. There are tons of them online and all that. But the point is that you're going to have to. It's a bit more risky because it's quote unquote private, like in regards to the VNQ, which is going to be like on a formal exchange. That's going to be the real difference. So we're coming up to half of the hour. I'm going to stop talking now. So I'm going to give you guys the opportunity now to ask questions. I see some questions already on the Twitter feed. So I'm going to give you guys now the chance to respond and to ask questions. I think I have Aliyu, right? So Aliyu, if you can hear me, you can go for it whilst I take the DM questions here. Aliyu, go for it, sir. So I have the question on the DM, and the guy is asking for for Sharia compliant REITs in Nigeria. Yes, there are Sharia compliant REITs in the US. I am not sure of Nigeria. I know of Sharia compliance for equity. So Lotus, if you can Google Lotus Nigeria, they have Sharia compliant ETF and mutual funds, but I'm not sure they have Sharia compliant property option. But I'm going to take a look for you before the chat is over, and I can send that to you. Yeah. So Fabal or Aliyu, you guys can go ahead. I hope you can hear me though. Can you guys hear? Okay, let me go back to the DMs. I'm going to get servants. I'm going to get you.
Can you hear me?
I can hear you. Go for it. Yeah.
Thank you for the section. My question basically is on, you were saying that you lock in your interest rate, right? So I know some of the banks do reprice their loans, right? If interest rates are going up or down. So how does this play in this situation?
Yeah. So what I'm saying is, when you take a mortgage, and I'm talking about the US, right? When you take a mortgage, you have the two options. You can do a fixed rate, or you can do an adjustable rate mortgage. If you do a fixed rate mortgage for 10 or 15 or 30 years, you've locked in that rate for 30 years. So if you bought a house in the US with a mortgage that was locked for 30 years, remember in the 10th year, you can still rent out that property at the going market price, but your mortgage is locked in for the next 30 years. So already you see an opportunity for arbitrage there. That's the point I'm making, because you are buying as the investor, right? That's where I'm coming from. So I know that answers your query. You're already locked in the cost and you're simply renting at today's price. So you can make a spread on the difference between the inflation rate and then the rate that you borrow the property, because we're talking about cash flow, not the house itself. The house has to generate cash flow, otherwise it's not going to be really when I'm interested in it, right? Does that answer your question, sir?
Yes, it does, but I'm just looking at it in the context of Nigeria, because I know most of these banks, they reprice their loan, right? So
exactly.
They tell you your interest rate has been adjusted based on the interest rates in the market, right? So
you're very correct.
Right?
You're very correct. This is why I try to separate like Nigeria from offshore. So you may not be able to do this in Nigeria. When I gave the example, I was very specific. This is not Nigeria, because in Nigeria they reprice your loans. But you can still go to the bank and say you want to lock it in. What will it cost you? Maybe ask the bank, but I doubt they will give that to you if you're just doing a mortgage or one. But if you try to lock it in, it's also possible. You can get the loan and reprice or refinance, but ask them. But I doubt, like you're saying, that you can get a 30-year fixed rate mortgage in Nigeria. I know NHF does about 15 years. That's something you can explore. But otherwise, it might be difficult for you to get that in Nigeria. I agree with you. Make sense? Okay, so I got light skinned, and then I've got light skin. If you can hear me, you can go ahead, and then we've got the other guy. So I'm going to post up just to respond to the gentleman that asked about Sharia compliant REITs. I found one is the SP Funds S&P Global Sharia ETF, right? So I'm going to post it on the Twitter handle for you. So just go to my Twitter handle and you see there, and then that's basically going to be the Sharia compliant REIT. Now, I don't know if Chaka has it, but I can help you send this over to Chaka and see if they have it. I'm mentioning Chaka because they are SEC registered, not because I'm doing advertising for them, right? But if I can maybe send it over to them and see if they have it. But if you go to the Twitter feed, you'll see there the S&P Funds Global. The ticker is going to be the SPREUS. So that's a Sharia compliant REIT. Lightskin, if you can hear me, go for it and speak.
Yeah, good morning, sir.
How you doing?
I'm doing good. So basically, yeah, thank God you're a Nigerian. So I basically want to ask, finding out like, as a 21-year-old, how do you start real estate business? How do you start investing?
Great question. So I think, and that was why I'm actually doing just the securities part of real estate, because most times people look at real estate investing as building the house. And to build a house as a 21-year-old, you have no savings, you have no cash flow, you have no bank loans. It's next to impossible. So the way you want to start is to invest in securities. You want to get the cash flow and the exposure of real estate companies. So I gave you guys two options. Number one is you could go buy Nigerian quoted REITs, 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 or in the market. So that's like something like the UPDC. It's available on Nigerian Stock Exchange. Any broker can buy it for you. You can buy it online or through a traditional broker. But I did mention that those REITs were really performing poorly in terms of yield. So I then said you can also from Nigeria buy US properties via a REIT. So you could buy the VNQ, which is what I spoke about earlier, buying that for yourself. That gives you exposure if you bought the VNQ to US properties. You can also buy the VNQI. That gives you exposure to properties outside the US, say Japan, Europe, and all that kind of stuff. So I would start from there as a 21-year-old, and you can buy with as low as $20. I will start from there and start to build up my portfolio because I'm targeting cash flow, right? As a 21-year-old. And as I get older and my income gets higher, even before I build a house, I can own REITs. Then as I try to save, I can then start to invest in buying my own physical property in Nigeria. But that's how I would approach it. If I was you, I would go for the REITs first, securities before I then build a physical house. Hope that makes sense to you, sir.
Yeah, definitely. So, on estimate, right? How much do you think will cost to build a full house and sell it? Let me say, probably, if you are looking at probably like, let's say, 10 million or so. Like, what can 10 million give to you? Is it like a story building or something like that? What's the estimate?
Well, it's all going to be based on location, and the quality that you'd like to build. So I'm not a developer. You might want to get specifics from a developer, but it's going to be cost of land, cost of the bank loan, cost of tightening regulation. Those are going to be your main drivers of the cost for you, right? I know that I read in September that it's going to cost give or take about 6 million to build a 2-bedroom. That's not Lagos or Abuja. But that gives you an idea. What I'll say is this, yeah, don't wait. Don't wait till you get the money. Start to invest. If you see land in a good state where you can give you title, try to buy it. Ignore the location. If it's 10 miles away, just buy it and keep it, right? So you lock in something now because land is always going to be there and all that. So don't wait. That's just what I'll say. Wait, don't wait. Try to get something in, but talk to a developer for that specific. Yeah. So I got Nidu next. Nidu, go for it, sir.
Good morning, sir.
How you doing?
I'm good, sir. So I have a question about the Vanguard REIT.
Yeah.
So the 5-year annualized return, does it include reinvesting the dividend income from the ETF?
Exactly, because the whole idea of the REIT is that the REITs have got to pay you back almost 90%, right, of the rental that they get. They can't keep money per se. When they get the rental, they have to pay you back almost 90%. So if you got that return, that's going to be literally what's driving your return, right? Your principal plus that return they're going to get back. I don't know if I have the link. I'll try to post the link so you can read the actual report. But that's basically what it's driving, because it's properties, right? So they have an inflation hedge. You get your income, and you are also buying the underlying property that you invested. So yeah, that's the answer.
Okay, sir. So I have another question.
Yeah, go for it.
So last year during the height of the COVID-19,
yeah,
US property owners, they were complaining, saying tenants were finding it hard to pay rent because they were claiming force majeure, an act of God.
Yeah.
So in this case where this Vanguard ETF is exposed to the US real estate market,
yeah,
what happens in this case where most of their properties tenants find it hard to pay in a force majeure case?
Yeah, good question. So when you are buying, the VNQ is very, very diversified, right? So they are buying corporate, they are buying residential property, right? So that's why it's a bit diversified, and it's Vanguard. They have a lot of money, they can spread themselves around. This question will be very, very important when you want to buy those private crowd-funded investments. You want to make sure what you are buying. They will give you individual options, but you want to make sure that you're buying either corporate or you're buying, say, private sector. Where are you buying the corporate? If you're buying an Amazon warehouse or you're buying something that's going to be in a big growing city like Florida, then you are still good. But if you're buying something in New York, for instance, where the COVID hit, that might be a problem for you. So it's all about location, location, location. Not everywhere is hot in the US, right? Some locations, rent don't go up at all. Some locations, you can't even get a house. So it's still back to you doing some homework. And if you can't do the homework, give it to the experts, give it to Vanguard or the guys that know what they're doing, and let them buy that stuff for you. Don't try to be the expert. That's basically what I'll answer to that, Nadu. Hope that works for you. You're welcome. Owibe, I've got you, sir. Go ahead. I've got Owibe, I've got More, and I've got Hassan Sheikh. So Owibe, we're waiting for you. Go ahead, sir.
So basically, I sent you a DM
Okay.
I sent you a DM about this situation. So my father owns real estate in Ibadan, various sizes, about 300 acres somewhere, 50 and all like that. This is about 15 years ago.
Yeah.
So we mortgaged some of them. We got a mortgage to get some of them. So basically, some years after, the government had an acquisition. They acquired properties close to the express.
Yeah.
And that really went into some of the properties, about 2 of them. Now I'm asking, how can that be solved, one? And then how can one avoid such a situation?
Bro,
in this case, like, you cannot even sell some of it to, settle the mortgage, and the rest, you cannot just get the value from it.
so basically,
This is a property that has obviously shot up in value, and you can't even tap into that value.
yeah, so you got the land and the government took a part of the land, right?
Yes.
Yeah, so who did you get the land from? It was from the government or from an individual?
From families.
Yeah, that's going to be a problem, bro. And I'm just being honest with you. When when I was talking about buying property, I was saying when you buy from the family, you are buying at a high risk, right? The value appreciates when you get title. That's the whole idea. You are paying very, very low because you are buying at a very, very high risk. And when the government comes in Nigeria, the government in Nigeria owns all the land in Nigeria. We are basically leaseholders. So we don't own any land. The government owns all the land. The government can come in through eminent domain, or they can come in and say, we want to use that land for this and take it, and then you are the wrong end of the stick. So I really can't say anything here. You'd have to go speak to a lawyer and then see what your options are. But the government has that right. That's the thing, yeah.
Yeah, I think yes, you can right there, and there are some there are some steps that we have taken. But I want to just stress that this is a case whereby because the governor was confident before why the whole purchase was going on. And I think that's the reason that a lot of people, usually overlook that the government can just come and they can just come and claim your land.
Yeah.
So that is one. And then two, we wrote with them, we discussed with them, and we got a letter to pay some money to free it from acquisition. So this is a case whenever you also have to pay the government again when you are going to get your land back. You also have to pay the government again to have possession of your property that you paid for initially.
You see, the thing is this, yeah. I hear what you're saying, right? The problem is this in Nigeria, title in Nigeria, getting title is very difficult. The way you should buy land with the way it's set up now is to buy directly from the government. But if you do that, it's going to be very, very expensive. So people go and buy from the family. That's what I do. Everyone does that. But the risk is that if you buy it, anything can happen before you regularize the title. So this is a legal thing. I would just, I feel for you, bro, but I think you should just try to, get legal advice, see what you can do, really, because there's not no advice I'm going to give you here. It's the government, really. The only advice is going to be when everyone buys from family, then we take the deed of assignment to Alausa and we regularize it. Yeah, but that's the risk, really. I'm so sorry for you. Sorry for what happened to you, but try to see if you can get advice. Yeah.
Thank you.
Yeah, I appreciate you calling. Yeah. Okay. So Hassan, you can go for it, sir. Hassan, can you hear? I hear you. How are you doing today?
Yeah. When you entered into the conversation, you mentioned of someone in Abuja that was like renting out from the property owner, renovate and rent out again. So I would just want to know, like, what the deal of agreement would be between him and the owner, like,
because where I am, I'm a little bit into that space, and I know it will be very difficult for you to actually speak to maybe a property owner having a 3 bedroom. Okay, I want to convert it to a duplex for like 5 or 6 or 10 years, and afterwards, I probably look at it like, no, it's not possible. So, and the property scene, this is like Abuja and Lagos is different from, say, where I am, like in Kwara.
Yeah.
So, I just want to, if it's an option, because when you were saying that, I actually look at it like, it will actually make a whole lot of sense if it can actually work and if that idea can be tested somewhere else. So, we have a whole lot of buildings here.
Yeah.
Like, okay, this like 20, 30 years back, they are still renting. So if you can go on and meet the property owner, like, okay, what you have is a 2 bedroom. Like, okay, let's do a top up, like renovate, maybe convert to a 3 bedroom, a family size house.
Yeah.
Let's have an agreement for 10 years. And this is what I pay. After 10 years, it becomes. So I just want to know what it feels like around. That is the first thing. So something about the last person that actually called for the land delivered and everything. We have a whole lot of cases around here too. People that you get plans from families and overs and government will come and everything. But like the advice you gave, there are always people, especially property lawyers, that actually know who to call, the buttons to press, because Nigerian property is all about knowing the right people. And like you said, they are just tenants. The government owns all the land. So if they actually press in the right button to meet the right people, they can actually release land for them. And I think the reason why government do most of them is this. Let's say we have a land now, somewhere very, like a remote area, like maybe we call them all those bushes, and government feel, okay, we are constructing a major road along that side. So the families will now decide, okay, we have probably those lands are actually ancestral farms where their grandfather used to farm. They just too late to it. What they do, they get what they call what they even call them, these urban planners, and they just carve out an area, put marks, 100 by 50, 100 by 100, and they start selling.
Yeah.
So after construction, they now say, okay, maybe a school will be suitable here, or something, maybe a hospital will be here. So that one increases the value of the land. Now, the people knowing what they've done, they actually sell it off. They won't even go for an official. So that's why if anybody is buying, and there's a whole lot of them going on around them in the country, you tell them, come and buy a piece of land for 200,000, 150.
Yeah.
So we should just be very, very careful for what we buy. In those things, and I believe every state in Nigeria right now has a way of regularizing their land system. So they have a degree of land somewhere in the state system. Just go there. This is what I want to do. This is what I want to do. Like you said,
it's a huge mess, brother. It's a huge mess. I've got into it personally myself, buying land, and it's a huge mess.
If one does not even know who is the right person, I don't even actually go into land issues. My one is to get the land. I can actually advise, okay, we can get you a 2-bedroom here. It will actually sell. Don't build a 2-bedroom here. Build a single room here, and it will actually sell. So that's what I do. About land issue, I don't even know, but it's a message. About my first question, please, if there's any deep information, I would actually like to have them. Thank you very much.
Yeah, so I'll just do quick. So remember what I talked about. Real estate to me is cash flow. Forget about the house, it's cash flow. But real estate is also location. So see what he's doing. He's not just buying a 4-bedroom duplex. He's buying a 4-bedroom duplex in a location like Asokoro, Maitama, Wuse, a very highbrow area. So he buys those big mansions that have a lot of space, right, in Abuja. Then he goes and he takes a parlor and makes one room. He takes a study and makes one room. So he converts the 4-bedroom cash flow to a 5 or 6-bedroom cash flow. And that's his profit. The 2 rooms extra he's building is his cash flow. And he can rent it out. And I think what he does is that he signs with them to say when he's leaving, he puts it back the way he met it. I think that's what he does. He puts it back the way he met it. And they're okay because those homes are large. They don't have a lot of tenants because no one can really afford them. So he's able to give them that cash flow. And then when he's going, for now, nobody has left. He says he's going to put it back. So it can't be tried everywhere. If you try it in some locations, you might not find tenants that want to live in a highbrow area and pay that amount of money. But in Abuja, you have bankers, you have people that can afford to stay in a one bedroom in a Socorro, and that makes sense for them. So it's location, 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 but it's also cash flow. I think that's the way I'll put it. Hey, Laz, more Efe. I think I got you. You can go ahead and speak, sir.
Okay. Yeah. So, one question. Although I'm not really sure if it's correct. I've been discussing with a couple of friends. So basically, based on inflation rate and the reduction of naira value over the years, if you want to look at it from, let's say, 2006, 2008, and so, let's for assume you have a fixed cash flow at that time, and you buy a land at the rate of maybe 200,000 per plot, and you build the property. Also, and maybe based on the inflation and the devaluation of naira over the years, is it a worthwhile investment that will give you a return if you're renting it out or you want to make a business out of the property? Pending also the factor that you also need to be maintaining the apartment or the house, improving it also, or trying to restore it. And the cost of building material is also rising in comparison to when you add the original money. So usually the question is such kind of investment worth it really in Nigeria at this kind of point, at this period in time?
Yeah, I think it's a good question, and I did address that when I was speaking. I said most in Nigeria it's difficult to make profit on property because the cost to build that property is very, very high. So the margin becomes very, very low when you are renting. So if you notice in Nigeria, you see a lot of build, sell, because that's the only way they can get cash flow back in bulk to pay back the banks. In the US, you only pay 10% when you buy the house, and the house is yours, and you can rent it out, and you are already making a profit from day one because you're not paying full cash immediately, right? You can pay 10%, you get the rent, you use the rent and pay the bank back. You can make tiny money, but you are making equity on the home. Nigeria doesn't have that system set up yet. So you run into the issue of that you take 100 million naira and build a house, you have to sell to pay back the bank. And even if you must rent, maybe you're renting in US dollars or you're building a very, very high margin house to sell. So for me, I think you've hit the nail on the head that it might not be that profitable. I'm not a developer, but if you ask them, they struggle to build a house and rent out. I think the solution is the type of homes we're building. I see the market is in the 1-2 bedroom, not in the 4-5 bedroom. The 4-5 bedroom guys can live anywhere. They are big boys in Lekki. That 1-2 bedroom, that quote unquote face me and face you. Imagine if you have a nice, neat face me and face you. You build, it's going to be maybe 4 stories, and you get more cash flow from that same square foot than you would get building, say, luxury 4-bedroom duplexes in Lekki. It's all about cash flow. And when you are building, you want to build to get cash flow. That's what I think personally.
Yeah, I think what you said is important. Mainly, actually, after you finish, with respect to the type of population that Nigeria is having at the moment, young people, single, and just moving away from parents' home or just trying to settle.
Yeah.
So there are a lot of single people. Yeah, so that makes sense. Yeah.
I hear you. All right. So I got Akintayo, and then I got Light. I got Splendora. So I'm just gonna take everyone. Then we're so close by 2. I got Nedu. I got Shisef. I got Princely. I got CY Oluyinka. So light skin. Akintayo, go for it, sir.
Yeah. Good morning, Mr. Carlo.
Hey, how you doing today?
Yeah, I'm fine. Sorry, I just wanted to ask. I don't know if you mentioned this earlier. Do you have any? Do you know any brokers that you can recommend for the foreign-based rates? Maybe a fintech company or actual brokers where we can get skin in the game.
I hear you.
These rates that you mentioned.
I hear you. I think it's on Chaka. And I think Chaka is registered by SEC. I know a few others, but I don't want to mention them because they're not registered by SEC. I don't get in trouble. But I think Chaka is registered by SEC, and I looked, and they had that stuff there. Yeah.
Okay, Chaka, yeah?
Yep.
Okay, all right. Thank you.
You're welcome. All right. Thanks so much. Hey, Prince Leo. Can you hear me? Go for it, sir.
Yeah, basically, from what Abayomi said,
Uh-huh.
I really wanted to find out like good brokers. So from what you've said now, so you don't get in trouble, can I like DM you? You can send me some new brokers where I could like place those ETF investments.
Maybe. I can't guarantee. Maybe. But SEC, Chaka is registered. That's all I know with SEC. That's really why I'm mentioning them. But, apart from that, yeah. Yeah, we can talk.
Okay, I'll send you an email.
All right, super. All right, Nedu, that's Chinedu Ogumbi. Go for it, sir.
Okay, sir, I have this question about the Land Use Act. If developers or investors know there's a political risk with the Land Use Act, and if they have this vision of building just those nice single bedrooms, face me, I face you, for single users, but they know there's this political risk with the Land Use Act. Is that not in some way hampering the development of real estate in the country?
I think Land Use Act needs to be amended because it makes property difficult. You have to transfer title to get equitable mortgage. So that is an issue that we can talk about, but it needs to be amended as a whole. And it makes everything cumbersome. A human being has to sign your paper if you sell land. I can buy shares for 5 billion, nobody will sign. But if I buy land for 50,000 naira, a human being has to sign. Doesn't make any sense. So yes, in broad terms, I agree with you. Land Use Act needs to be amended. It's in the way. That's what I'll say. Does that make sense?
Yes, sir. Okay, so I have another question.
Yeah.
There's something in vogue now. It's called Airbnb arbitrage.
Airbnb arbitrage. Interesting.
Airbnb arbitrage. Yes, they go to Ibro areas in the islands in Lagos. They rent a full duplex.
Yeah.
Let's say for 4 million or 5 million naira. Let's say four bedroom duplex. They rent out individual rooms on Airbnb.
Yeah.
For like a month, and they take the difference on the arbitrage. In some way, is it advisable to do that, or are there factors you want to consider before doing that?
I like it. It's a way of generating cash flow. And I know someone had told me before that they had a company in Abuja. That's what they do in Abuja. I don't mention the company. They get money and then they buy a house and then they do this thing you are saying. They build rooms and they rent out. I like it personally because you are milking cash flow from the company. I like it. So all I'll say is that you have to just be careful when you're going to contract with people. Make sure things are signed and make sure you know what you're getting into. But in terms of the product itself, I think it's a good idea. But make sure you are doing your due diligence, you are getting your lawyers and all that involved. That's what I'll say.
Thank you, sir.
All right, cool. So I got Prince Leo. Prince Leo, can you hear us? So you can go ahead and talk. We're gonna go for it, sir.
Subsidize real estate. But then, as against trying to acquire the land, what we're trying to go into is specific leases based on areas. So maybe a 20-year lease in Karo works differently from an 18-year lease in Yaba.
Okay.
Example, right? But basically, what we're trying to do is to make it easier for people to come to real estate investment at smaller tickets. Right? Basically, they can. And I think clearly what you even mentioned about the Land Use Act is something that really been bothering us because you will have to say whoever is investing has an ownership to this period of time. But I think just similar to the last question that was asked, what sort of concerns would you have? What sort of rules do you see that necessary to be poked when someone is trying to grab real estate financing like this?
So there are many things you have to make sure you've gotten right. If you are going to take money from a quote unquote investors, you might need a SEC license or if you're going to be a collective scheme, you want to make sure you're licensed by the cooperative in your state. So you have that licensing set up. You must make sure you don't overpromise, right? If this is the yield, keep that yield. Don't say you're going to make 100% per se. That's what I think you want to do. Use technology to, to market it, to reduce your cost, because property is the margin you're making from the rental and the cost. So you want to reduce those costs as much as possible by using technology, and make sure you collect paperwork, do your due diligence, and you are insured. Not just insurance against fire and all that, but insured against should the government come and scrap the whole thing and all that. Those are just what come to my head and what you're talking about. But these are what you want to do. Yeah. Hello? I think it's dropped off. Okay. CEO Oluyinka, can you hear me? Please go for it, sir.
Yes, I can hear you. Good day, everyone. So just a quick one, a quick addendum on what you just said. I think the one advice that I can give that guy is, if you're looking to maybe acquire land or acquire property somewhere, I think one easy way to find out if you're going to have any issue with the land act, your land use act or not, is find out from mortgage bank if they are willing to invest in that area, if they are willing to give you mortgage for that area. Because recent experience in Abuja, if you approach mortgage bank that you want to buy property, they will ask you to go and bring the documents, and they look at the area. If you have AMAC papers, mortgage bank will not entertain you. But if you have FCDA papers, they know this is genuine government paper, that it's hard for anything to go wrong in that regard. So I can just chip that in, like if mortgage bank are willing, then I think you're like 50%, on the way. But if they are not, then you should do some serious search before you invest anything in that area.
Wow.
That being said, my question is, as someone who is we are still new, we are trying to put one or two things together in the business. On one of your tweets before, I've complained severally why developers were building houses that nobody wants to live. And as someone who is, trying to correct that, and we've been at this for like the past 2-3 years now. And this is a question that borders on the potential business model. Let's say we bought a property, we touch it up a bit, and we resell. We bought another one, we touch it up a bit, we resell at 5 to 10%, 12% profit margin. It's nothing too serious, so we can always sell. And now we are looking at, we have some 40-50 million naira to play with. What would be your best recommendation? What would be your recommendation between hypothetically we can still through all these acts and we can get government land? What would be your recommendation? Do we build units? Do we build as many units as possible and we start renting out while trying to attract more investors to build more? Or would you recommend that we continue build something that is easily sellable, and you've been saying everything is cash flow? Which one do you think is easier for someone who is just starting? We don't have the power to, we don't have the capacity to compete with the FAB of this world and whatnot. What would you recommend? What would be your recommended business model? Build something that you can easily resell, or build as many as possible that you can start renting out while trying to attract more investors? That's my question.
Thank you so much. I think the answer is going to be, where are you getting your money from? How are you financed? Could you turn your radio off, or I'm gonna? Oh, yeah.
I don't have a radio with me.
Yeah, I'm getting feedback on it. Okay, so how you are financed is going to be the what determines how you approach the market size, right? If you are financed by a very, very expensive loan, then you have to sell because you can't rent and cover the cost. That's just the reality, right? But if you got equity financing or you got low cost financing, it's then easier, in quote, for you to rent out and make payments monthly because you can get the rent, pay off your interest cost, and also have cash flow, right? So if you do not have low cost financing, it's difficult to rent. So your financing is going to determine your strategy, more or less. That's really the answer. That's why if you are able to get crowded funding, which means you're not paying them interest, it's easier for you to rent because then those guys will basically get a share of the rentals, which is what like a REIT is doing. So that's just going to be the answer. How your funding comes determines really how you are able to then progress. That's how I'll answer you. But I wanted just to highlight the point you made. You made a very, very important point with the paperwork. So if you are trying to buy a land, I hear you saying you should take that land to a bank and ask the bank if the bank will lend you money for that land. And if the bank says yes, we'll lend you money, that's a good indicator that you are holding something good. But if the bank tells you no, we will not lend you money, that's going to be a big, big red flag for you. So I think that's a big, big point you've made, and I want people to also get that in. Guys, last two we're going to take Issa and we're going to take CEO Loyinka. So Issa, go for it, sir.
Morning. Thank you very much for the.
How you doing?
I just wanted to know, last week I kind of stole my brother because I wanted to ask you what. So thank you for that, sir. So again, I will just rephrase it kind of. So
Okay.
my question is, in speaking to estate developers and people in real estate, I live in Abuja. I've lived in Abuja my entire life, and in 1990 I was in Lagos for like I saw so many apartments, and I think you've tweeted about this a lot actually. So I don't understand why you're building 4, 5 bedroom apartments in extremely luxurious places and not areas where the larger population of your house or your bank or the people who really need stuff. Like I'm employed, I work for one bank, and some of my colleagues are because, and then like if I tell them this, I'm paying so amount for rent where I am, and then there's only no way I'm paying 200,000 for a single bedroom flat that is this small. Sorry, this, and it doesn't add up to me. Like I don't understand why is. I don't know if you're like that knowledgeable about how the investment works, but how does that make more sense to them? Like, you just said something about your business model is like that. So is that what is impressive?
Yeah, I think that's what it is, because if you have to pay back a huge bank loan, right? What it means is that you have to then what's it called? You have to sell. So most people build those luxury homes because that's the fastest way to pay back a huge loan. That's basically what I think is going on. It's if you can sell a 5-bedroom luxury duplex, you can pay back faster than you can rent out 1, 2, 3 bedrooms. That's what. But if you don't sell it, then you're in trouble. But I think that's why they go that way. But I'm not a developer; they would know better, right?
Yes, sir. But what I'm just trying to see is there no viable market?
I think the market is in 1, 2, 3 bedroom flats. When we had the Nigerian Refinance Corporation, and then they were going to refinance mortgages, the demand was in 2 and 3 bedroom flats. That was what the demand was. That's where the population of Nigeria is young. So they want 2, 3 bedroom. That's where they want to have starter homes from, not 4, 5 bedroom duplexes. The demand is in 1, 2, and 3.
Yes, sir. Honestly, that's an outsider. It just feels like nobody's, so I don't know.
It's the risk. It's the risk. I understand why they are doing it. I understand why they are doing it, but it's just the risk of the market. So I think that's what's going on. Yeah. All right, guys. So the last guy to speak today, Mr. Oluyinka. How you doing, sir? I'm so sorry about the DMs if I cannot reach you on DMs. I'm going to post this on the podcast once we're done. So if you missed or you came in late, you can also follow if you missed or you came in late, right? So the whole thing will be posted on the podcast, and the podcast is basically going to be, the address is going to be on my profile. So guys, if Olayinka is not going to speak, I'll just do a summary and I'll close. Thank you. I think we've talked about investing in real estate. We made the point that real estate is all about cash flow. And real estate is going to be either income coming to us or we are saving costs. When we buy our own home, we're saving costs. When we invest in real estate, we're targeting to get cash flow. We talked about Nigeria and the US and the differences between both of them. The real difference was just in the options that were available to us offshore. We spoke about ETFs, a mutual fund that invest in real estate. We talked about buying land or flipping and all that. And we also looked about the arbitrage opportunity that exists when we take a fixed income loan and then we are also able to then rent out at current market rates. If we lock in our costs, we can rent out and we can make that arbitrage. So we've said a lot, and like I said, I'm going to post the podcast so you can listen if you didn't miss it out. I think the key thing that I learned today as well was that if I want to take a loan or if I want to build a house in Nigeria, I should take the paper, the land papers to the bank, and I should ask the bank if the bank would accept that from me. If the bank says yes, they'll set up for me, that gives me a big greater confidence that the land papers or that area is good for development. That's a good hack that I learned today. So we can also take that ourselves and work with it. So on that note, guys, we're going to have to call it a day this week. We'll be back in a fortnight to talk again about investments. I appreciate you guys for all listening. Mr. Wally, I see you. All right. So take care, sir. You guys take care of yourselves and stay safe. Love you all. Bye.